is actually record this session here. I had an email. So I was talking about how do we use HPS or the quad rotations, or at least the methodology, divergence and stuff on multiple time frames. And one of the things is, again, I think if you follow different time frames, you're going to be much better off. Like you follow the 1 minute, 3 minute, 5 minute. I think 60 is a little long. So I want to make this bigger like this, and we're gonna zoom in on this, 'cause I want to show you something. So this is what's happening today. And this is like when you think about portfolio management or just getting into positions and not worried about day trading, but just investing in general and waiting for some good pullbacks and good stocks, and you have your watch list of stocks. We're looking at stocks like Google, on a pullback, even Microsoft on the pullback, stocks that are going to come back. So typically we look at the history of these on the daily. We get oversold, we get the pop, but it's not the perfect. Sometimes you have to wait a day or two, but the majority of the time when that 9.3 gets oversold, we're pretty much close to being it. And this is, you have to put your mind in this and say, all right, what's my job here? I'm not going to be stressed out at this level. I want to get, but at least you have some sense of maybe buying into weakness. Not some investors just decide to get in, but this takes advantage of. It doesn't take much to recognize it, and it'll save you or make you so much more money in the long run, instead of just saying, "Oh, I'm just going to buy here randomly." If you weren't if you weren't a trader and didn't know some things about trading, you have no rhyme or reason. People I talk to all the time, and I mentioned stochastics, they have no idea what I'm talking about. And I said I can't even go into it really. It's just you have to learn it, and then you realize there's certain things that you're going to learn from that. And we see it all the time. So if we could see it, and it always happens, why wouldn't you believe it the time it's happening again? Now, every so often it will break down, and this could be it. But we're also very close. Now we're going to say, all right, well, how do we tighten this entry up here? Do we just go long here, blindly long, or do we want to get the best bang for the buck? So what I would do there is go now that we know we're in our area where we have a nice pullback, oversold. Now I'll break it down to the 60-minute time frame, and then we'll wait for that 60-minute to kind of give us that 60. So right now we actually have the 60 set up. So I'm going to put that line here. Basically, that just shows you the 6. Now it's not a divergence, but if it was, we'd count that, as a divergence, and then add weight to the entry. But so right now we have a 60-minute and a daily oversold, and then we could go down to the next time frame, and we have the 5-minute. So the 5-minute was just getting oversold, and we're actually on that trend line here. So everything was kind of lining up right here. We just mentioned it before, and I said, I wanted to videotape this. We're just starting to get everything lined up. The 5-minute was coming into play. That's timing gets really, really tight. So now in the big picture, you might have the best entry based off multiple time frame entries. The 60 minutes on your side, the dailies on your side, the 5 minutes on your side. So you have a lot of things on your side, and that's how you could trade these. And that's how take your new positions in Amazon. Like Amazon down here is probably great. Now we could just read Amazon. That's a totally different chart altogether. It's actually looking okay today, because I'm looking at the 5-minute chart on that. But that's how we want to tighten your position using multiple time frames. Use those same stochastic oscillators, but use them on different time frames, and then make sure they're all lining up.